Peer-to-peer, P2P, lending has become an increasingly popular investment option, offering individuals the opportunity to lend money directly to borrowers without going through traditional financial institutions. This innovative form of lending allows investors to earn higher returns compared to conventional savings accounts or bonds. However, while the potential rewards can be substantial, P2P lending comes with its own set of risks, including borrower defaults and platform failures. Understanding the benefits, risks, and how P2P lending works is crucial for anyone looking to explore this alternative investment. In this article, we'll delve into the key aspects of peer-to-peer lending. In this video, we will talk about exploring peer-to-peer lending as an investment option. So make sure to watch the full video. 1. What is peer-to-peer lending? Understanding the basics. Peer-to-peer, P2P, lending is a method of borrowing and lending money directly between individuals, bypassing traditional financial institutions like banks. It allows investors to lend money to borrowers via online platforms in exchange for interest payments. P2P lending connects borrowers who may not qualify for conventional loans with investors seeking higher returns. The platform acts as an intermediary to manage the loan process, offering a streamlined and often quicker way to secure financing while providing an alternative investment opportunity for individuals. 2. How peer-to-peer lending platforms work. Peer-to-peer lending platforms serve as the digital marketplace where borrowers and investors meet. Borrowers submit loan applications through these platforms, which evaluate their creditworthiness using alternative data and algorithms. Investors, in turn, can browse through various loan opportunities and choose where to allocate their funds. The platform manages the loan process, ensuring repayment schedules, collecting interest, and distributing payments to investors. The technology behind P2P platforms ensures a secure, transparent, and efficient way for individuals to lend or borrow money with minimal intermediaries. 3. The benefits of peer-to-peer lending for investors. Peer-to-peer lending offers numerous advantages for investors. One of the main draws is the potential for higher returns compared to traditional investment options like savings accounts or bonds. Since interest rates are typically higher in P2P loans, investors can benefit from significant earnings. Additionally, P2P lending offers portfolio diversification by adding alternative assets that are not correlated with the stock market, potentially lowering overall risk. It also provides more control over investment choices, allowing investors to choose loan types, amounts, and terms that align with their preferences. 4. Risks involved in peer-to-peer lending investments. While peer-to-peer lending presents lucrative opportunities, it's not without risks. The primary risk is borrower default, as there is no guarantee that borrowers will repay their loans, particularly for those with lower credit scores. Another risk involves platform failure. If a P2P lending platform goes out of business, investors may lose their funds. Additionally, the returns on P2P loans are not fixed and can fluctuate depending on the loan's performance and interest rates. Investors must be prepared for potential losses and diversify their investments to mitigate these risks. 5. Evaluating peer-to-peer lending platforms. Key considerations. When considering investing in peer-to-peer lending, it's essential to evaluate the platforms carefully. Look for platforms with a strong track record, transparent processes, and solid customer support. Consider the platform's risk management strategies, including how they assess borrowers' creditworthiness. Pay attention to fees charged by the platform, as these can impact overall returns. Review available investment options and loan types to ensure they align with your investment goals. Research the platform's liquidity options and whether investors can exit loans before the term ends. A thorough evaluation ensures a safer and more rewarding investment experience. 6. Interest rates and returns in peer-to-peer lending. Interest rates in peer-to-peer lending can be much higher than those in traditional financial products, offering investors potentially high returns. Borrowers are often charged higher rates due to the unsecured nature of the loan, and those returns are passed on to investors. Rates vary based on the borrower's credit profile, loan amount, and the platform's terms. For investors, understanding how returns are calculated and the risk-adjusted rates for different types of loans is essential. While the returns can be attractive, it's important to consider the default risk and overall loan performance to ensure sustainable earnings. 7. How to diversify your investments in peer-to-peer lending. Diversification is a key strategy when investing in peer-to-peer lending, helping to mitigate risk by spreading investments across multiple loans. Instead of investing in a single loan, investors should consider diversifying their investments among various borrowers, loan types, and risk categories. This can be done by investing small amounts in several loans, which reduces exposure to defaults from any single borrower. Many P2P lending platforms allow automatic diversification features where the system allocates investments across a wide range of loans. Diversification increases the likelihood of stable returns and minimizes potential losses from loan defaults. 8. Regulatory framework and legal aspects of peer-to-peer lending. The regulatory framework around peer-to-peer lending varies by country and can significantly impact both borrowers and investors. In many regions, P2P platforms are subject to financial regulations to ensure transparency, fairness, and protection of investors. In some cases, platforms must register with financial authorities, disclose certain risks, and implement measures to ensure compliance with anti-money laundering laws. As an investor, it's important to understand the legal landscape in your jurisdiction, the protections available, and the regulatory risks that may affect your investments. Staying informed ensures you are adequately protected while investing in P2P lending. 9. The future of peer-to-peer lending, trends and innovations. Peer-to-peer lending continues to evolve with technological innovations and shifting market trends. Future trends include the use of artificial intelligence and machine learning for improved borrower credit assessments and enhanced risk management. Blockchain technology may also play a role in increasing the transparency and security of transactions. In addition, we may see more integration with traditional financial services as P2P platforms collaborate with banks and credit institutions. As these technologies and partnerships grow, P2P lending is likely to become an even more prominent part of the global financial landscape, offering more opportunities and improved features for investors and borrowers alike. 10. Is peer-to-peer lending right for you? Factors to consider. Before deciding if peer-to-peer lending is a suitable investment strategy, it's important to assess your financial goals, risk tolerance, and investment timeline. P2P lending offers high potential returns, but it also carries risks such as borrower defaults and platform instability. Those seeking short-term gains may find P2P lending appealing, but long-term investors should consider the volatility and potential for illiquidity. Additionally, evaluate how much time and effort you're willing to dedicate to researching platforms and loans. If you value diversification and higher returns and are comfortable with the risks involved, P2P lending could be an excellent addition to your portfolio. What do you think of our video? Let me know in the comment section below. If you enjoyed this video, make sure to hit that like button. Also subscribe to our channel before you go. Thank you for watching.